Dalal trade gains for the third straight week amid a range-bound trade. The Sensex and Nifty did touch new record highs this week, but could not sustain the rally. Financials were the big gainers this week. The Nifty Banking Index gaining about 1.5%. Over the next 30 minutes, we'll decode the week's market action, put the spotlight on the broader market underperformance this year, and decode Meesho's nearly 5,500 crore IPO that's set to open on 3rd of December. Hello and welcome to Editors Roundtable. I'm Reema Tendulkar. With me are Nigel, Nimesh and Prashant. And joining us here in the studio, in the newsroom, is Nimesh Chandan, CIO, Bajaj, Finserv, AMC. Hi guys, we got the headlines, right?
Yes.
All-time highs after 14 long months. But you just didn't get that feeling, like that bullish feeling, the momentum.
I'm getting that feeling looking at you. Yesterday was red, today is green. All Christmas.
All Christmas.
Christmassy colors, right? But I think, I was looking at the market today. I was doing some stuff for CNBC-TV18 Access.
Yeah.
So not on the regular shows, but this was a draggy kind of a day. Huh?
Yeah.
Absolutely draggy kind of a day. Nothing at all. Nimesh.
Absolutely flat on the index, Nifty, small cap, really no momentum. The only momentum seems to be that promoters come, they sell, the FIs come, they sell. That's been the big trend.
There is
and IPO action continues.
Yeah, and the IPO action continues. So I think that's been the two common trend, IPOs and promoter selling.
You guys have seen that meme on social media? It's a famous meme and people use it for all kinds of things. Nimesh, I just thought of it. Nimesh said, every day FIs come and sell, every day IPOs come and sell. तो क्या है? रोज सुबह उठो और क्या? पैसा जाता है और सो जाओ. Something like that, right? But I don't know if it's been that bad. Actually, the week, how
We're
they
up about 0.5%
I
for
think
the
let's
week.
just wrap up, the action, and then we go across to Nimesh and ask what's going on. So basically, all-time highs. Portfolio is not feeling like that. Small cap index close to 10% away, and individual stocks down 40, 50, 60% or thereabouts. The supply of paper continues, and a lot of large IPOs. That's what's sucking out liquidity. So one argument is that the domestic liquidity is picking up, which is very, very good. Everyone's doing a good job. The other argument is, what's the use? The promoters are taking away the money. You're left with the dream, and they are left with the money. And you could argue that some of that money comes back, but the kind of supply of paper, that's something that's a little bit worrying, both in the secondary as well as in the primary market as well. The FI selling, well, that's toned down a little bit. I recall a couple of months ago in September, August, we did see a lot of selling out there. So they continue to remain sellers, but the pace of selling actually has toned down, and on days they turn mild buyers as well, though they continue to remain net short around 80, 81% or thereabouts, which isn't such a bad thing. Till the Nifty holds on to the 20 DMA, you'll say Santa will come to town hopefully in December, and hopefully we'll brace for higher highs. And just one point, all through the year we've been talking about India underperforming, right? November, actually, we either market performed or we outperformed as well, because the Nifty goes on with a gain of around 2%, and the Shanghai market actually is down close to around 2%. So, though they have outperformed us year to date, for November at least, we had more green than them, which is good in itself. What do we track from here on? Central bank action is going to be very, very important, right? The Fed, whether they're going to cut, not cut, what's going to happen on that front. That Fed futures, actually, that probability has moved from 30% to 80% and 85% as well. But hopefully, the Fed does come about with a cut. I don't know whether it's the last cut from the Fed chair, going by Mr. Trump, had to say. And then the RBI as well, all probability they cut. And Bank of Japan, we'll have to keep an eye out on that, whether or not there's any kind of shocker that comes out of there, because we know that yen carry trade has its repercussions. And hopefully, the second half of the year is going to be very good. Earnings will pick up, economy will pick up, things will look good, and will not be as dull as this. So.
But I think Nimesh has a lot of conviction in the markets. Nimesh, you are seeing a melt up phase. Those were your words?
Yeah. So last time I was with you guys, I had said that markets look like a coiled spring. And with this new high being touched this week, I think we are set for a melt up when actually some of the positive news that people are waiting for may come. This new high is underappreciated, clearly. Sure. All the major worries that we had in terms of geopolitics, in terms of trade deals, in terms of Trump still tweeting about immigration, all these worries stay. FIs are still selling. And yet, the market has crossed a new high. And with sectors like banking, and I think the mid-cap index also crossed a new high. So I think this strength is underappreciated. With these worries, if we are here, if many of these things get solved, you can imagine where we would be. So I'm actually quite positive on the markets. Earnings growth is picking up, economic growth is picking up. The government has done everything to boost consumption. And this demand that comes will, I think, be the flywheel that will help capex, that will help exports, that will help the deals getting signed quickly. So when people say that China has a bargaining power with rare earth, I think we have a bargaining power with the world in terms of having the fastest growing young economy.
Right.
So I'm quite positive.
You know, Chandan, Nimesh, the other part of the argument is it's been a narrow market at the top. You know, only select stocks has helped the Nifty reach the all-time high. Even the the IT index is down for this year, right? So it's been very selective pockets which have done well, and the broader markets have been really bad in that sense in terms of performance. How do you read the broader market performance from at least for this year?
So when there is certain dearth of growth, say in a year when you are seeing slow growth, and which I think from last year, if I say from September 2024, people have in the first half, in the first 6 months from there, people were revising growth downwards.
Yeah.
There was lack of growth. So clearly people would want to hide into something which is giving them consistent growth. There were so many news events, headlines driving markets. People would want to again be in a place where they don't see so much volatility and they are ready to give a higher premium for that.
Sure.
So which means, and I think the IPO interest also was because of that. Okay, if I'm getting some listing gain, I would want to invest and put my cash there. While this has been a narrow market, I would also flip the argument and say that a lot of stocks actually have upside, which have not really moved. Again, last time when I was on your show, I said we look at target prices of BSE 200 companies. Out of the 200 companies today, if I look at it, there are 2 companies who have stale estimates and are not giving any target prices. Out of the 198, 172 companies have a positive upside in terms of target price, according to what Bloomberg calculates as an aggregate of all the average prices. I'm not taking the bullish prices. And 96 of them have a double-digit upside. So that's about 50% of the universe, which is yet seeing a higher move. So that makes me actually more bullish that though right now you're absolutely right that things are quite narrow in terms of movement, but that gives me more hope that we will move.
It'll spread out.
It'll spread out, it'll widen.
You know, guys, you were talking about some of those triggers, right? Is the India-US thing also a trigger? I mean, whenever that happens, one of the triggers in your equation?
Absolutely. I think India, US, and now I would even add India, European Union deal.
So there is positivity on India, EU. I just want to, if the producer can pull up the graphics. So our colleague Shireen just interviewed a bunch of secretaries, Commerce Secretary included. And I just want to read out. So this is from the top trade secretary, right? He says, and just an hour back the conversation happened, Rajesh Agarwal, the Commerce Secretary, says there was commitment for completion of the India-US bilateral trade agreement, the full BTA by the fall. Things have changed. In between, a lot of global trade landscape, etc., has changed. Engaged in talks for a BTA, a trade agreement with the US. Trade agreements involve much more than market access. And then he says, okay, he does say very optimistic to find a solution within this calendar year.
This fiscal year, I guess.
No, it says calendar year.
It says calendar year.
So which is now like, whatever, 1 month, right? Which is what the market is expecting as well. But then he says presumption is that trade deal will be beneficial if both sets of 25% tariffs are tackled. Right? It's not the penal tariff of 25% is taken off. Whenever the deal is signed, both sets of tariffs will have to be addressed. Talks are still on. There is larger one which is also being discussed. BTA will take a lot of time when reciprocal tariffs are there. So it seems like it's. I mean, there is. I don't know. I mean, we'll get this exact soundbite. But he also said this entire trade agreement, a proper trade agreement, will take a lot of time because there is these reciprocal tariffs. Does it mean anything to you, and how do you think about it? Market expectation is this week, next week. Next week nahi hota hai, to agle hafte. But what's your sense?
And we've got the makings, right? Because crude buying has gone down. Defense deal is happening. You had the textile stocks, the indicator that Prashant talks about, Gokuldas, Welspun Limited. They went into the weekend up 10%. So those indicators are indicating that deal hai.
So market's definitely expecting a deal. But let's just back up a little and say that if you look at the entire trade tariff restrictions that have been put on us, that 50% tariff, 25 plus 25, affected about 0.3 to 0.5% of GDP. It affected less than 2% of the corporate profits in BSE 500. It created a negative sentiment, mainly, and that has put pressure on the markets. Now, I believe if that 25% penalty goes away, Indian businesses are competitive enough to take market share and be there. See, we've also got a little bit beneficiary for exporters, a little bit benefit of rupee depreciating a little bit there. Also, government, what I read yesterday, they are also coming out with a package to help some of the exporters either diversify the markets or handle their costs and taxes better.
Yeah.
So even if there's one leg of the deal, see, many of these bilateral treaties, which were handshakes till now, the details are yet to be worked out even with some of the other countries. So it is possible that the full-fledged deal may take some time. But even if there is an indication that the 25% extra penalty that we have been put on, unfairly though, that goes away, I think markets would cherish that.
Okay, all right. Let's focus on, I think today's big data point that we're going to put out, and that's by Nimesh. Nimesh, everyone's been talking about pain in the broader markets, not feeling like 52-week lifetime highs. Let's put it into data points, right? You have dissected the data. Let's hear more about
Well, that's something which will show up in the data as well. But market has been like two halves this year, clearly, Nigel. The good part is the Nifty and Bank Nifty is all-time high.
Yeah.
But the even bad part is that the broader markets have seen massive pains this year. So let me just go to the wall and show the data as well. So again, as I said, the broader market has seen a big pain in this calendar year. While the Nifty and Bank Nifties are at all-time high, multiple stocks in the broader markets are down 50 to 70%. That's the kind of fall you've seen in the broader market stocks. The next split will come up across the three major indices, the BSE small cap, the BSE mid cap, small cap, and the micro cap. In the BSE mid cap, 52% of the stocks are given negative returns. It's equally bad in the small cap and the micro cap. Now look at the first, which is the mid cap index. Look at the kind of stock correction we've seen. Ola Electric is down 52%, Brainbees is down 52%, Vedant Fashion, a good name, that is down 52%. Kalyan Jewellers is down almost 40% in this calendar year, and so is Oracle Finance, which is down 36%. So that's some of the bunch of names in the mid-cap index. Now comes the small-cap index. If that list is much higher and much more painful, Sadhana Nitrochem, that stock is down 86% in this calendar year. Vishnu Prakash was an IPO this year, that's down 72%. Dream Folks, Pakka, there was a lot of retail interest in Pakka, that stock is down 62%. And one of those listing of this year, MobiKwik, even that's down 60%. As I said, the small cap list is much bigger. Another sets of stocks will come up in the small cap basket. Praj Industries, a momentum name, a lot of institutional interest, that's down 60%. Tejas Networks is down 60%. Provek, again, it was seen as one of the big beneficiaries of tourism, that's down 60%. So is Protein eGovern and Ganesha Eco. A good institutional holding in these two names, even they are down almost 57-60%. So that's the small cap. Now comes the micro cap. A lot of pain in the micro cap stocks as well. Jindal Worldwide is down 60. Street Planners is down 55. Orchid Pharma is down 53. KNR Constructions, Root Mobile, more than 50%. So that's only the list of stocks which are down more than 50% in calendar year. Now is the mid-cap index, the Nifty Mid-Cap 100 Index. All good names. Swiggy is down 25%, Supreme Industries, NTPC, Green, Godrej Properties from the real estate pack, that's down 25%, and IRB Infra is also down 25%. So that's the kind of list. Across mid, small, micro, everything is down. Now look at some of the standout names within those big losers. Ola Electric, from the IPO price, it's down almost 65%, but from the highs, it's down 74%. And now the company is saying that they're going to raise funds via QIP. So again, Ola Electric has been a big disaster in this calendar year. The second name is Sadhana Nitro. I identified this because the stock was down almost 86%. The promoter holding has fallen down from 65 to almost 30% in this calendar year. So clearly it looks like it's the retails who have lapped up and their holding has gone up big time. And that stock is down 86% in this calendar year. So that was the second name. Another new listing was this year, Vishnu Prakash. That stock is still down from the 52-week high, it's still down 76%. And even here, the story is simple. The retail holding has gone up all the way up to 26% in this calendar year. So that's Sadhana Nitro. Another stock which will come up on the screen is Ganesha Ecosphere. This is interesting. From a 52-week high of almost 2,500, now the stock this week actually hit a low of 850 and is quoting around 950 odd level. So it's down almost 63%. Interestingly, the mutual fund owns nearly 22% in that particular stock. And the last name is Provek. It was seen as a big play on the tourism. That stock from a high of 1,300 is down nearly 77% and hit a low of 300 rupees. Even there, the current, the retail holding is quite high at 20%. So clearly, whether in stocks where the promoters have sold or whether they were QIPs, everyone lapped up in this year, but the pain has been quite strong. And you can see from the data as well, a lot of mid and small cap stocks are down 50, 60, 70%. Nimesh, your thought on some of those companies where the promoters sold the QIPs, there is money by QIP. It's a old saying that when promoters sell, it has to be negative. I mean, for a while, it didn't turn out to be. Everyone thought it's a new norm. Now it's a reality, right? A lot of promoters have sold out. Retail holding has gone up. And look at the list, like 70 down, 55 down, 60 down. What's your take?
So the list that you presented, we keep a watch on that list, and we are more focused towards the BSE 200 side. So I saw about 50% of the companies are at least 10% or more away from their 52-week highs. And you're right, some of them have actually fallen 50 to 70%, like what you highlighted. And they are institutional stocks also.
Absolutely.
There has been institutional holding in there. Now, typically what happens in a market where the sentiment is not very positive, people overreact to a negative news that comes and underreact to a positive news that comes. In fact, not all of them, but some of the names in that list are worth looking at.
That was the point, after the fall, would you look at some of those names as a potential buying candidate?
See, in small caps and mid caps, I would put mid caps, small caps, and micro caps. You can generate a lot of alpha if you're a stock picker. Because though businesses are very diverse, people get bullish or bearish about the entire category at one go.
Absolutely.
So, sub small cap kharab hai or sub small cap achhe. Right? No? That is how people move. So that's why the opportunity lies for a stock picker to pick up some of these fallen angels. And I'm not saying the entire basket is right, but there would be some which you can pick from, where people would have overreacted or so. So
Nimesh,
I would look at it.
I'm getting a sense that you've done your homework on a couple of these stocks where
it's quite evident.
You know which ones. So आप as a homework for the weekend, दो तीन बता दीजिए, मतलब जो पढ़ना चाहिए, देखना चाहिए, which you can learn from, which you should go back and look at. I mean, it'll be useful.
See, I also believe that winners of the previous rally don't create the next rally. Right? If we want to look at rallies in BFSI, infra, construction companies, real estate companies, look at what happened between 2003 and 2007. Even PSU banks, those were the winners. Maybe the next few years will be like that, where you need to look at some of these infra companies, real estate.
बहुत cryptic हो गया. मतलब कुछ एक दो तीन आप मतलब specific company just as a purpose for one can go back.
I may not be able to.
Are there other names in this list which Nimesh mentioned?
Some of the construction companies we are positive on, so we've started accumulating. I can't name them, I'm sorry, but there were only few construction companies there, so you can pick up which ones are there.
Nimesh, आप बता.
So another thing is, it is very tempting to generalize that so many promoters are selling, so many QIPs are coming, so many IPOs are coming.
Opportunity comes
then
from
everything is negative. Okay. So on the overall market, despite the supply market is at a new high, but where does this money go? Somebody asked me, Nimesh, how much money is there in the market today? I said zero, because somebody has sold and somebody has bought. There's nothing in the market, right? So where is this money going? Obviously, when money is going out of the country, an international listing comes, takes money out, sends it to the parent, that obviously is negative for the market because the money has gone out. But if it is going into certain capex for the company, or it is getting somewhere again directed towards the market through a private equity fund or some fund sold the stock and they bought something else. So that rotation is fine. If India is a market and an economy that can attract flows, then all this will be like part of the path.
Nimesh, just hold on. We need to slip into a very short break on that note. As we do that, India's Commerce Secretary and Chief Trade Negotiator, Rajesh Agarwal, let's listen in to what he had to say when he spoke to Shireen Bhan on the US trade negotiations.
The stocks are still on, and it is because these are two negotiations also. There's a larger one also which is going on. So talks are on. Our teams are engaging virtually on a regular basis. There are virtual sessions every week on some issue or other. Let's wait for some time. You may see the visits can happen either way. Whether we visit them or they visit us. They were in pretty lockdown for some time, 45 days or so. Now they are out of lockdown. The assumption is that a trade deal will be beneficial for Indian exports only when there will be addressal of both 25% tariffs, not only the one which is a trade tariff which has been imposed on trade in lieu of the lack of trade deal, but also the other 25% tariff which is which have been imposed for some other geopolitical reasons. Until unless both are addressed together, it will not mean a meaningful deal for India.
Welcome back. You're watching Editors Roundtable. Well, next week, all eyes will be on Meesho as the IPO is all set to open between 3rd and 5th of December. Just some key details. They're looking to raise 5,420 crore. Of that, 4,250 will be a fresh issue. Balance 1,100, 1,200 will be an offer for sale. Now, here are some stats about Meesho. Well, it is India's largest e-commerce platform in terms of orders and users. 1 out of 6 Indians shop on Meesho. 234 million are their annual transacting users. And in terms of orders processed, last year it was 183 crore. The growth numbers are also very large for the company. They've been growing. I mean, if you look at the net merchandise value, that was about 20,000 crore in the first half of the year. And the whole of last year, it was 30,000 crore. Now, this was a company which pioneered zero commission model. They didn't charge anything from the sellers, unlike what an Amazon, Flipkart did. So how do they make money? Largely from their own in-house logistic fulfillment channel. It's called Valmo, which processes about 2/3 of all the orders of Meesho right now. And the other way for the company to make money is via advertising. So these are the two levers via which the company makes money. Nothing from the sellers. It's a pure zero commission. Now the question really is on the valuations. It's 50,000 crore is the asking market capitalization. In H1, the company made a loss of 7,000 crore rupees. And if you compare it in terms of price to sales, Meesho comes at 5.3 times. Now, this will be lower than some of the other consumer internet e-commerce players, like Eternal is at 14 times, Lenskart came at 10, 11 times, Nykaa is also at about 10 times, Trent is at 9 times. So the closest comparable in terms of price to sales for Meesho would be DMart. But DMart is highly profitable, while Meesho, as of now, had a loss, as I said, of 700 crore rupees. So, I mean, generally, when you look at all the IPOs, like Lenskart, Pine, Grow, they're all actually trading above the issue price, despite the concern around valuation, etc. We still have to wait for a few quarters of numbers to play out. There could be a bad quarter, stock falls, lock-in period for some has to end. But how are you positioned in your portfolio on these consumer?
We are very, very selective.
Which ones do you like? I mean, with the disclosure?
So we've been participants, as it was disclosed. We've been participant in Grow. Okay. We've been participant in a pharmaceutical company called Rubicon Research. So we've been very, very selective in terms of our participation. In Benjamin Graham's book, there is a phrase that during bull markets, IPO full form should be, it's probably overpriced. So we go with that. So if in the secondary market, we are getting value, then we don't chase IPOs that way. So that's a fund house strategy, or our fund house stance at Bajaj. But still, the kind of companies that are coming for IPOs, so valuation aside, the kind of companies that are coming for IPOs is still good quality companies. Majority of them. I'm not tracking all of them that come, but majority of them are good companies. Either are coming with a digital or a tech platform or a more futuristic business or a high growth business. I think that's still a positive sign for the market. You should be worried when at a higher valuation you see companies which have questionable business models, are typically also ran not any leadership in the business or a brand or moat in there, but they come for IPOs and are getting oversubscribed. Then you should be worried about. I think that's a sign where one should be worried. Otherwise, while being selective on valuations, we are not really say no to any IPO.
Yeah, they've all achieved scale. All these companies are, as you said, leaders in their own category.
One of the factors also will be when lock-ins open, right?
Lock-ins open,
because
yeah.
the pre-IPO, the lock-ins will open, and then I think some more supply comes. Right now, for many of these companies, the free float is kind of low.
See, over a longer term, every company gets the shareholders it deserves. So institutions who are truly focused on long-term businesses will use these opportunities whenever, say, after the lock-in, if there is a sharp correction, just people shorting for the reason that they're expecting somebody to sell, then slowly the color of the book, the color of the shareholding in every company will change to get what they deserve to be. I think in a year's time, you will actually see what the IPO list was and what the actual shareholders remain.
Yeah.
But Nimesh, this has been a great conversation. Thank you very much for coming down to our studio. Enjoy your weekend. And we'll take away that there's a melt-up coming in the markets. It sets us up well for the month of December. Well, with that, it's a wrap on this edition of Editors Roundtable. Thank you very much for watching.